Good afternoon, ladies and gentlemen. Welcome to Business Today Television. As we all know, there is a roaring bull market on the Lal Street. The Nifty and the Bank Nifty have hit record highs. And apart from the secondary markets, what's equally red hot and not hotter, perhaps hotter still, is the primary market. There are three IPO issues open at the moment. And for the present while, we'll be discussing the prospects of India Shelter Finance with me. On the show, Mr. Rupinder Singh. He's the MD and CEO of India Shelter Finance, and joining us is also CFO, Mr. Ashish Gupta. A very warm good afternoon to you both, gentlemen. I am sure these are very exciting days. I'll just give our audience a very brief outline of what the IPO is about, and then we'll get into brass tacks. Ladies and gentlemen, this is a 1,200 crore IPO which has opened for subscription yesterday. Of this, 800 is fresh issue and 400 is offer for sale. The price is in the vicinity of 469 to 493 rupees per share. And the company, of course, as the name is very clear, offers housing finance in 5 particular states, which are Rajasthan, which are Madhya Pradesh, as also Gujarat, Karnataka, and Maharashtra. Gentlemen, let's begin the discussion with you. Firstly, our very sincere and heartfelt congratulations to you for this wonderful IPO that has hit the screen. What is the proceeds going to be used for? I believe 800 crores is fresh issue of capital, which will go back to the company.
Yeah. First of all, thank you so much, Shalanji, for calling on your channel. And yes, issue opened yesterday. In fact, if we talk about the anchor book, that got completely filled before the issue got open. And good names like ICICI, Goldman Sachs, PT International, NatAccess, Kotak mutual funds, they're all supported in this anchor book. And as issue open, we are also optimistic, positive about it. And numbers looks good as the time is getting progressed. So if we see, this is a business where, raw material is entirely at capital money, which is required to grow, to bring the right optics as we keep growing in the business around that side. So today the net worth of companies 1,375 CR. With this capital, which will come now around 800 units, this will cross the 2,000 crore mark, which is a very important for the entire financial ecosystem, because for us the cost of fund is very important. Then the rating upgradation, that's equally important, because these all play in sync in that sense. So once we cross this barrier of 2,000 crore in terms of capital, that opens a lot of avenues around that side. So ultimately, financial service, finance business, where we have to lend after borrowing, capital plays an important role, and the same capital is going to utilize for strengthening the company further. So this is a thought about it.
Okay. Mr. Singh, let's get Mr. Gupta into the conversation. Ashish ji, a very warm welcome to you. What are the proceeds of the IPO going to be used for? 800 crores. Is it, what are the 2 or 3 major points of growth for this particular company? Are you going in for geographical expansion? Are you going in for getting the same customers from different geographies? What is the proceeds going to be used for?
So primarily, if you look at the 800 crore will be to strengthen the capital base for the company. If you look at the leverage of the company, we are at this point of time is around 3.5x leverage. So down the line, once we have this capital in place, our leverage will be close to about 2.25 times. And and this capital will provide us a runway for about 4 years for our growth. And if you see, our geographical presence, we are present in 15 states, which is covering about 94% of the affordable housing finance market. So idea of this capital is to further, deeper our penetration into these geographies. So at this point of time, the thought is to, expand further into the states where we are present, and then, look for our journey for the next 4 years.
Okay. Mr. Singh, this question comes to you. India Shelter Finance typically looks at tier 2, tier 3 cities where the income levels are, of course, much lesser than metro cities of Delhi and Mumbai. Can you just describe the audience that you have in terms of the target where you'd like to disburse more loans? what are the non-performing assets also from this particular sector of the society?
Yes, yes, absolutely. So the tier two, tier three markets where we operate, we have always inclination toward funding the self-employed category there, who are serving that ecosystem particularly. There can be small shopkeepers, grocery shops, sweet mart, some workshops around that piece, in a small level service providers in those particular territory. So these are the generally customers who have a monthly income which varies from 25,000 to 55,000, 60,000, and they have a stable business from last few years. And now, as a part of next level of their development in life, change of phase in life, they always look that home is an important avenue. And most of them, in fact, 70% of the customers who comes on a board, they are the first time mortgage borrowing takers basically. So they have not taken early any home loan. This is going to be their first home, and for that they have built certain equity themselves. But since they feel that this is not enough to get a home instantly, then they look for loans from companies like India Shelter. So ticket size remains around 10 lakh rupees here. What we operate between 5 lakhs to 30 lakh rupees of loan around that side, where the home loans goes in tune of 60% and 40% is the loan against property. That's the ratio which we try to maintain. So you'll find the self-employed, those small kind of business guys who are operating those places and typically taking a loan in tune of 5 to 25 lakhs. So that is a way they look for a loan. Good part here is when we see the loan to LTV, because this is an important criteria that is normally very, very low in our kind of case. So LTVs on the home loans are in tune from 57, 58%, where it's a loan against property, they are more conservative. There the LTVs are in tune of 45%. So because of that, the risks are quite low. And if we see the GNPA numbers, as we published in September number, that is again a 1% of GNPA number basically. That talks about the choice of customer, the kind of underwriting mechanism we create, and the kind of security we keep in mind.
Yes. Especially in a country like India, let's get Mr. Gupta into the conversation. Home is something which has great emotional value. And I am given to understand that the non-payment rates, Mr. Gupta, in this particular category are far lower than what you would imagine in the metro as well as larger cities. Is this understanding correct?
Yeah, in fact, this is your understanding is clearly reflecting in our, delinquency number. So if you look at our GNPA, it's pretty much, stable around 1%. And, if you look at the COVID scenario where, the cash flows of the borrower has gone for a toss for, during COVID-1, COVID-2, we have seen a, peak GNPA number at close to 2.2, 2.3%. So, this particular phenomena during COVID, demonetization, GST, all that reflect the kind of, stability that we have in terms of our portfolio with these kind of customer set.
Okay. Before we get into the nitty-gritty of financials, Mr. Gupta, I'd just like to ask this question. 15 states have a presence of 203 branches for India Shelter Finance. Where are they headed over the medium term, say 3 years from now? What is the extent of geographical reach that you would be covering over the next 36 months?
So, over the period, next 2 years, we will not be entering into any further states at this point of time. So thought is to, further deepen our presence in our existing states where we are present. So like, Rajasthan is a like flagship state that we opened in, 2010. And later on, in 2018, we have expanded into southern part of the country. So like AP, Tamil Nadu, Karnataka. So our, our proportion of branches that we will open will be slightly higher in the southern part of the country. But overall, the new branches that we will be open will be distributed across the states where we are present.
Okay. Would you like to give the number of new branches to be opened over the next 36 months, Mr. Gupta?
So over the period annually, we will try and open around 35 to 40 odd branches from here. So you can say, over the 3 year, we'll be opening about 100 odd branches.
Okay. 100 over 3 years. Let's now, Mr. Singh, focus on the nitty-gritties of your balance sheet. What is the size of the loan book at the moment and how has it grown over the last 2 years or so?
So the size of our loan book is 5,100 as we close the H1 September 30th number. And if we see last few years, that is a consistent growth, CAGR of 40%, which has been given around this. And this is spread across all.
Hello? Yes, it's spread across over.
It's spread across all 15 states basically. So all the states have given a very good contribution. Rajasthan being the biggest state and the oldest one. There again, there's a consistency number, and same as you can see in the southern markets where we start operation around 6 years back.
Okay, so 5,100 crores is the size of the loan book as of September 30th, growing at 40% CAGR over the last 2 years. Mr. Singh, will you also break it over housing loans and loan against property?
So housing loan contribution is coming around 58-59%, and our wish is to continue at the rate of 60% and above, and remaining is going to be the loan against property.
Okay, so that's the 60-40 breakup which you are likely saying will continue over a period of time, correct?
Absolutely, absolutely.
Okay. Mr. Gupta, what is the average borrowing cost in terms of interest rates for India Shelter Finance?
So, in our borrowing strategy, what we have done is that we have, diversified our borrowing profile, to around 35 odd lenders. So, if you see the larger proportion of our funding comes from bank, then we also do some, securitization assignment. We do borrow from mutual fund, insurance companies to some extent. Then we have some ECBs as well. So all in cost, we have been able to negotiate around, our average cost of fund close to 8.6% as of now. And with this equity infusion that is coming, there is a potential that we can have a rating upgrade from our current rating, which is A plus to AA category. So this kind of this kind of opportunity of rating upgrade will further help us to diversify our borrowing to insurance companies, to PF trust, wherein we can further borrow long-term funding for our business purpose.
Absolutely. And obviously this 8.6, which is 8.6% is the average cost of funds, is most likely to go down by how many BPS, BIPs?
So if you look at the PS cost of fund briefly, having a AA rating, their cost of fund is about 30-40 basis point lower than us. So this is the rating upgrade. We expect that we should be able to cover that journey over next 2 to 3 years from now.
Okay, so let's put a ballpark number of 8.3, 8.4%.
So it's not gonna to happen immediately. So that's why I can't put a number, but it's a journey that we have to cover once we have our capital in place. So obviously we'll try for the best.
Fair point. Let's get Mr. Singh's view now. So your borrowing costs are about 8.6%, Rupinder ji. What do you lend at?
So spreads are around 6% if you see. So where in home loan we lend 13% onwards, and in loan against property we lend 14.5% onwards. And if you see the average output in terms of yields, that comes around 14.5, 14.6% for us. So this is the rate at which what we are lending. And going forward also we feel that these are the spreads that we want to maintain, irrespective of cost of funds going down or remain same basically. So we want to support the ecosystem in terms of the new acquisition, new customers, and whatever possible best service we can give a customer.
Okay, so 6% is the spread, and on average, when you look at your loan ticket size, Mr. Singh, let's presume the round number is 20 lakhs. Let's just say 10 lakhs. How much would you expect your buyer of the loan to put in as his own collateral for buying the home that he wishes to?
So our average LTV is around 52% on both. Obviously, there is a difference between home loan and lakh. In home loan, this is around 58-59. So if it is 10 lakh rupees of loan, if some customer is taking from us, we expect at least 7 to 8 lakhs should be around from the customer side.
Okay, that's pretty steep. It's normally the other way around in the cities where the buyer puts in anywhere between 10 and 20% and takes a home loan for 80%. Why is this, Mr. Gupta? Is there a specific reason when you look at the kind of clientele that you address that you want them to have somewhere between 60 to 80% as collateral for the value of the home?
So generally, the kind of customers we are catering to, it is always a good underwriting or risk mitigation strategy that you are relying on assessed income, wherein you are relying on personal discussion with the customer, the way you have done the assessment. So it is always good that you keep your LTVs low to mitigate our risk. And further, during the these tier 2, tier 3 cities, whatever value you do assess, there is a like potential that you may not get that kind of liquidity when you go and sell the collateral. So probably it is always good to keep some buffer in your LTVs.
Okay. And the other question, Mr. Singh, which is the existential one I wanted to ask you, in this kind of transactions which you do, of course, you are blessed with a GNPA of just 1%. But what is the granularity when it comes to quality of papers, quality of ownership in terms of, how should I say, the cleanliness of the transaction on the land deed, on the papers which prove ownership over a number of years. What has been your experience in this one?
As a housing finance company, we have an advantage that we have a tools like Surface available today, basically. So these tools are very effective in case of any eventuality. But you have to be very clear from day one. While using this tool, you should have a very clear legal title available for those properties. So this is a very clear understanding, whether it's a property in semi-urban or in urban area or maybe a little further, the title of property has to be clear in the name of individual. So we don't look for an imperfect kind of collateral where legal documents are not available. The title is not named in any individual who is a part of loan. So unless until that title is not clear, we don't go for such kind of collaterals. In fact, we have built a strong legal team internally, which take care of respective clusters, almost 40-45 people, to make sure that the legal title are very well clear. And in case of any eventuality, they can be possessed by the virtue of SARFAESI legal process. So every property what we do, irrespective of any location geography, we look for legal title has to be clear around that.
Okay. Mr. Gupta, to you. Mr. Singh mentioned the 6% as your spread. Now I'd like to understand what is your cost structure in terms of the salaries, the administration, the marketing expenses. So we can deduct it from 6% and find out your actual gross profit.
Sure. So, so 6% is our, the gross spread in the form of interest. Then on top of that, about, we get around 2.5% in the form of our fee income that we get. On top of that, we collect a lot of service charges from our customer in the form of, in case, these customers don't have a, habit to keep money on the due date on which EMI is getting hit in their account. So a lot of bounce charges income comes and comes to us. Then on top of that, some cross-sell income also comes. So collectively, we get around 2.5% income over and above that. So collectively, our spread is 6% plus 2.5%. That is around 8.5% income that we make on our overall portfolio. Then on top of that, our total OPEX that is we have is around 4.5%. So 4.5% largely include the salaries cost, which is around to the extent of around 70% of this total 4.5x, wherein wherein about 50% of the OPEX comes from our field staff, or the branch structure. So largely, as we have discussed, we rely on direct sourcing of our customers. So we have about 203 branches. Every branch is manned by a branch manager. Then on top of that, they have about loan executives. So we have about 3,000 odd people in the system, wherein we incur about cost of around 3.5% in terms of total OPEX. So collectively, this is that we incur 4.5% OPEX, including salaries. Then our gross margins comes to around 4%, you can say. Then we pay some, credit cost of 0.5%, then some taxes. So basis that we get an ROA of around 4% net.
4% net is what you make on the kind of loans that you sort of put forth to the growing, booming, lower income middle class of India. Mr. Singh, 5,100 crore is your loan book. growing at 40% CAGR. Now tell us, where is this headed, say, in the medium term, 3 years from now?
So if you see the track around, this 15 states, we are present in 200 branches. There's a lot of scope going forward in opening many other branches in these places. As Ashish ji mentioned, there are 35, 40 branches which is planning year on year. There's a lot of output which is expected on from that side. Secondly, when any branch is getting opened, that has a certain gestation period, and the volume that branch doubles up every couple of years. So whatever the branches what we have opened in last few years, that's going to double in terms of productivity and output. So having said so, we have shown the consistency of 40%, and the trend looks similar. The way it's going around. So I think you can extrapolate from that side at which direction the business is going. So enough of growth is there. The structure is very well set in the entire country mortgage market. If you see 95% of market what we are covering, and very few players who think nationally that we are doing from day one, and that's giving us a good flow. And we are positive about in coming time also. We should follow the same traction.
Okay, so 5,100 crore rupees loan book is expected to grow at least 40% for the next 3 years at least. That's what Mr. Singh is saying. Let's shift focus to Mr. Gupta. Mr. Gupta, I was just asking, what is your estimate over the next 2 years for your top line and your profit after tax?
So, so given the growth, given the kind of growth that we have seen, historically, if you see, we have seen a growth of about 40% in our AUM, around 35% in our top line, and similar level in the bottom line. And given the strong demand that we have in this particular industry, we see that, similar kind of growth trend that we have seen historically should continue in the coming time.
Okay, let me just check out the CAGR profit and sales growth for you. Okay, net interest income has grown 32% over the last 2 years, and the trailing 12 month is 338 crores. Profit after tax has grown at a CAGR of 33%. Mr. Gupta, are you comfortable with this CAGR, which you said should extend over the next 2 or 3 years for profit, 33%?
So with the with the further infusion of this equity that we are getting, there will be change in the leverage number for the initial 1 or 2 or like 18-month kind of time. During this period, the lot of savings will happen on the total interest income. So probably for the initial 2 years, the growth rate will be slightly higher, and then it will again normalize to the similar levels.
Okay. With that, gentlemen, we draw to a close on this special IPO issue for India Shelter Finance. Again, our most sincere congratulations to you, to your team members for this wonderful issue. We hope that you get the maximum success possible. At the moment, the issue has been oversubscribed by about 2.9 times. Remember, it's a 1,200 crore rupee issue, priced at between 469 to 493 rupees per share. And 800 crores is fresh issue. 400 crores is offer for sale from 2 PE investors. In our conversation with us were Mr. Rupinder Singh, MD and CEO of India Shelter Finance, and CFO Mr. Ashish Gupta. Thank you, gentlemen, for spending time with us, and of course, the best of luck to you.
Thank you so much. Thanks once again.
Our IPO coverage. Do join us again at 2:30 p.m. Where we will be covering the DOMS IPO. Remember, this is a writing company, the one that makes very good pencils, which is also floating an IPO. So 2:30 p.m. we'll meet again. For the moment, the markets are in very fine shape. Let's just tell you what the index is doing. 244 points higher, 21,170 on the Nifty, and 1,000-point rally on the Nifty IT index, 34,105. Stay glued to BTTV for all your news needs on the financial side. Thank you so much.